Hey everyone, welcome back to Corporate Decoder, the place where we untangle the confusing world of corporate filings. Today we're diving into a Schedule 14A filing from Ellington Financial, and trust me, this one has a few twists and turns that are more exciting than watching paint dry, but maybe not by much. We will look at a few proposals for the shareholders, what they pay their board of directors, and some important relationships that the company has. Ready to decode? Let's get started. First up, we have the election of directors. Basically, shareholders get to vote on who sits on the board of directors. These are the people who oversee the company's management and make big decisions. In this case, there are 5 nominees, all of whom are already serving as directors. A vote for all is recommended by the board. Next, there's an advisory vote on executive pay, often called say on pay. This is where shareholders get to voice their opinion on how much the top executives are being paid. It's non-binding, meaning the board doesn't have to listen, but it's a good way to gauge shareholder sentiment. It is a vote for approval of this resolution, according to the board. Then we have the ratification of the appointment of PricewaterhouseCoopers LE or POC as the independent accounting firm for the year. This is a pretty standard procedure where shareholders get to approve the company's choice of auditor. The board recommend to vote for this. Now let's talk about how much PricewaterhouseCoopers gets paid. In 2024, the audit fees were about $3.8 million and audit-related fees were around $200,000. There were also tax fees of roughly $119,000. In total, the fees were about $431,019,000. In total, the fees were about $4.119,000 2023. However, the fees were about $533,019,000. In total, the fees were about $4.319,000. Moving on to corporate governance, the filing discusses the independence of the directors. This is important because independent directors are supposed to represent the interests of the shareholders, not management. The board has determined that 4 out of the 5 directors are independent. Let's talk about the people on the board. Ronald Simon is the chairman of the board, Lawrence Penn is the chief executive officer, Edward Resendez, Lisa Mumford, and Stephen Danhauser are all directors. Now let's scroll to the Nominating and Corporate Governance Committee. It looks at a number of things, including experience, skills, expertise, diversity of experience, personal and professional integrity, character, business judgment, time availability in light of other commitments, dedication, conflicts of interest, and such other relevant factors that the Nominating and Corporate Governance Committee considers appropriate in the context of the needs of the board. Next, the filing mentions certain relationships and related transactions. These are basically deals between the company and its manager, Ellington Financial Management, and its affiliates. This section explains the rules around these transactions, like cross-transactions, principal transactions, and investments in other Ellington accounts. The management aims to avoid conflict of interest here. Under their management agreement, they pay their manager a base management fee quarterly in arrears in an amount equal to 150% per annum of the equity of the operating partnership. Total base management fees incurred for the year ended December 31, 2024, 2024 were 2024 were 2024. Were 2023 for 2023. Let's move on to executive compensation. Since Ellington Financial is externally managed, the executives are actually employees of the manager, not the company itself. The company reimburses the manager for a portion of the salaries and bonuses of the Chief Financial Officer and Chief Accounting Officer. Our Chief Executive Officer and 2 other Co-Chief Investment Officers do not get cash compensation from the company for serving as Executive Officers and 2 other Co-Chief Investment Officer. Our Chief Executive Officer and 2 other Co-Chief Investment Officers do not get cash compensation from the company for serving as Executive Officers. Alright, let's get to the numbers. In 2024, the Chief Financial Officer, J.R. Harlehy, received a salary of about $206,000 and a bonus of roughly $473,000 and a total of about $682,000 for his servicee $2,000 for his servicee $2,000 for his services $100 and bonus, and a total of about $682,000 for his services. To further break it down, in 2024, the average compensation for non-PEO NEOs was $436,963. If you had invested $100 in Ellington Financial back in 2019, your investment would now be worth about $119.53. Lastly, let's not forget about the Audit Committee report. This is where the audit committee, which is responsible for overseeing the company's financial reporting process, gives its stamp of approval. They've reviewed the financial statements and are recommending that they be included in the annual report. Now, looking at Ellington Financial more broadly, it's a company that's navigating a complex world of mortgage-backed securities and real estate investments. The fact that they are externally managed is a little concerning. One notable risk is the company's reliance on external management. While it can be cost effective, it also means that the company's executives aren't directly accountable to the shareholders. This could lead to conflicts of interest or decisions that aren't in the best interest of the company. On the other hand, Ellington Financial has a diverse portfolio of assets which helps to mitigate risk. And the fact that the directors and officers have a good chunk of shares means they have some stake at the company. Overall, Ellington Financial seems to be in a stable position for now. What are your thoughts? Let me know in the comments below. Thanks for watching. If you found this helpful, please like, subscribe, and hit that notification bell to stay updated on all things corporate decoding. Until next time.